Here is a summary of AMC's Q3 2025 earnings call. Introduction. The call began with a standard introduction, noting that management comments may contain forward-looking statements and encouraging listeners to refer to SEC filings for risk factors. Non-GAAP measures were also mentioned, with reconciliations available in the earnings release. Financial highlights. Revenue. AMC reported $1.3 billion in revenue for the third quarter of 2025. Adjusted EBITDA. The company achieved $122 million in adjusted EBITDA. Beat consensus. AMC once again surpassed Wall Street consensus estimates for both revenue and adjusted EBITDA. Management's commentary and key metrics. Adam Aron, Chairman and CEO. Performance context. The third quarter was a softening period industry-wide, with the North American box office down approximately 11% year-over-year, following a strong Q2. However, AMC outperformed the industry. Record per patron revenue. AMC achieved an all-time record admissions revenue per patron of $12.25, and the second highest food and beverage revenue per patron in its 105-year history at $7.74. Contribution margin. Consolidated contribution margin per patron grew 9.2% compared to the prior year, and is now approximately 54% higher than pre-pandemic 2019 levels. Market share growth. AMC significantly increased its domestic market share in the U.S., now approximating 24% of the U.S. box office, making it about 50% larger than its two nearest competitors. Financial strengthening. The company successfully completed transformative capital markets transactions, refinancing $173 million of debt and equitizing $143 million of exchangeable debt, later increased to $183 million without additional equity or cash. Future outlook. Management is highly optimistic about Q4 2025 and 2026, predicting the highest grossing fourth quarter in 6 years and a dramatically larger 2026 box office. They anticipate that industry revenue growth will lead to even more rapid growth in AMC's financial results, with approximately 2/3 of incremental revenue dropping to the adjusted EBITDA line. Sean Goodman, Chief Financial Officer. Revenue growth. Consolidated revenue increased by 7.5% versus last year and is 47% above pre-pandemic Q3 2019. This growth is driven by a 60.5% increase in food and beverage revenue per patron and a 33.8% increase in admissions revenue per patron relative to Q3 2019. U.S. operations. Domestic adjusted EBITDA reached $111 million, exceeding Q3 2019 levels despite selling fewer tickets. This was achieved through a 50% higher domestic revenue per patron and a 57.5% higher domestic contribution margin per patron compared to 2019. Odeon operations. Despite a challenging European market, Odeon saw total revenue per patron up 13% and contribution margin per patron up 14.4% year-over-year. International revenue per patron is up 37%, and contribution margin per patron is up 42.2% versus 2019. Portfolio optimization. AMC has strategically managed its theater portfolio, closing 212 locations and opening 65 since January 2020, resulting in a net reduction of 147 theaters, approximately 15%. Liquidity. The company ended the quarter with $365.8 million in cash and cash equivalents. Free cash flow. AMC anticipates being free cash flow positive for the 9-month period ending December 31, 2025, provided Q4 box office performance meets expectations. Capital expenditures. Full year 2025 CapEx is projected to be between $175 million and $225 million. Debt reduction. Since the beginning of 2022, AMC has lowered its debt principal, finance leases, and COVID-related lease deferrals by nearly $1.5 billion. Key initiatives and future plans: innovative distribution. The success of the Taylor Swift Showgirl theatrical event generated $50 million in box office receipts in a single weekend and highlighted AMC's ability to execute unique, short-term content releases. Netflix partnership. AMC is exploring a cooperative relationship with Netflix, having successfully showcased K-pop Demon Hunters and seeing potential for further collaborations. Live events. AMC plans to prioritize broadcasting live concerts and sporting events on its large screens in 2026, leveraging its technical capabilities for live broadcasts to a significant portion of its theaters. Premium large formats. PLF significant investments continue in IMAX, with a focus on IMAX with Laser, Dolby Cinema, ScreenX, 4DX, and AMC's own Prime and iSense brands. AMC is also expanding its extra-large format XL screens, aiming for approximately 300 by next Christmas. Artificial intelligence. AI. AMC is exploring AI for operational efficiency and customer engagement, including a single-digit multi-million-dollar equity investment in Nova Sky Stories, a company focused on AI-powered aerial drone shows. Loyalty programs. Enhancements to AMC Stubs A-List, allowing 4 movies per week and easier access, and the introduction of Premiere Go are driving member engagement and repeat visits. A points-based loyalty program has also been launched in the UK and is expanding to other European territories. Significant risk factors. Industry box office performance. The overall recovery of the box office remains a critical factor, and future performance is dependent on studio release slates and consumer attendance. Studio consolidation. Potential mergers or acquisitions within the studio landscape could impact the number and types of films released, which directly affects AMC's business. Economic conditions. Consumer spending and sentiment in the broader economic environment can influence discretionary spending on movie tickets and concessions. Competition. While AMC has increased its market share, competition from other exhibitors and alternative entertainment options remains. Lowlights. Industry softness in Q3. The third quarter experienced an industry-wide slowdown in box office performance, which, while AMC outperformed, still represents a challenging environment. Debt levels. Despite recent efforts to strengthen the balance sheet, the company still carries significant debt. Dependence on Q4 performance. Free cash flow positivity for the 9-month period is contingent on the anticipated strong Q4 box office. Most important statements from management. Adam Aron. AMC's leading market position and the skills demonstrated in the implementation of our numerous and important marketing, operations, and cost containment strategies allowed us for yet another time to overperform the expectations of those who underestimate us. He also emphasized the significant increase in market share, stating, AMC is now about 50% larger than our 2 nearest competitors, and we are 10 times the size or more of everyone else. Aaron also highlighted the company's innovative distribution capabilities and commitment to premium experiences, noting, our every interaction with Taylor, with everyone in the Swift family, and all the people in our camp, all those interactions, every single one has been nothing less than a true joy and an honor and a privilege for AMC. Sean Goodman. These results are evidence that the box office does not need to fully recover to achieve pre-pandemic levels of adjusted EBITDA. This is thanks to a combination of initiatives focused on theater portfolio optimization, operational efficiencies, food and beverage innovations, industry-leading marketing programs, and the ongoing success of our AMC Go plan. He also stressed the company's financial discipline, stating, we'll continue to take decisive steps to strengthen our balance sheet so that we are increasingly well-positioned as the box office recovery continues. Conclusion: AMC expressed strong optimism for the remainder of 2025 and the upcoming year, driven by a robust film slate, continued market share gains, enhanced operational efficiencies, and a strengthened financial foundation. The company believes it is exceptionally well-positioned to capitalize on the industry's ongoing recovery and deliver long-term shareholder value.